further ado, this panel is called Do You Have What It Takes? What We Look For When Funding Web3 Businesses. We have Dan Yang as our moderator from the Algorand Foundation. We've got Alessia Baumgartner from DFW Labs. We've got Richard Skeet from Hivemind Capital, AJ Milne from Optio Capital, and Vineet Budki from Cypher Capital. And Dan will take it away, and we'll see you at happy hour. And thank you again for coming.
Super excited to be here on the stage. We got a super nice lineup of very experienced and very important VCs that came over all over the world. Just a quick introduction. Daniel, I'm the head of Algorand Ventures, based in Singapore. Without further ado, I want to just spend a couple minutes here for each guest to introduce himself. What is your fund? What is your mandate? What do you do? And what are you looking at the moment in the space? Alessia, starting with you.
Hi, guys. Nice to see everyone. Thank you so much, Algorand, for inviting DWF to join this event. Super excited to be here, meeting the Algorand ecosystem in person. My name is Alessia Baumgartner. I'm head of ecosystems at DWF Labs, which means I take care of all of our portfolio companies, including Algorand. DWF Labs is a market maker and investment firm. We are a multi-stage investment firm, so we invest in different times. So it could be pre-seed, seed rounds, pre-TGE, and then of course, after the company has been listed, we can also do OTC rounds. That's pretty much it. I'm based in Dubai, but I'm really excited to be here. Thanks again.
Thank you, Alessia. Richard.
Good afternoon, everyone. Richard Skeet. I'm one of the managing partners over at Hivemind Capital. We're here to help bridge institutional capital to the digital asset space. We're pretty busy, spread across the globe now. It's a growing team, mostly in the US. There's 5 of us in the UK. We have one partner out in Hong Kong. It's always good to be on the ground and local. We have funds that range from the venture side, private side, through to a dedicated token trading vehicle, through to the digital culture fund, aiming at blue chip art through the medium of NFTs. We've written checks on the private side from 100K to 40 million and everything in between. Thanks for having us, Daniel.
AJ.
Thank you, Daniel, and pleasure to be here for Decipher. So I'm AJ Milne, CEO of Optio Capital. So we're an Australian-based venture fund focusing in on early stage to growth stage projects, really from about $50,000 to $500,000 in terms of capital allocation. Our first fund, Meld Ventures, actually invested into some of the early projects that have been up on stage here today within the Algorand ecosystem. So we've been from 0 to 1 with Algorand, Dan, as you know, but love working with founders. We are founders at heart. We've run our own projects, so we know what it takes to go through the cycle.
Awesome, thank you. And Vineet.
Hi, everyone. I'm Vineet from Cypher Capital. We are a $100 million fund based out of Dubai. In fact, Wu Blockchain named us the most active VC in the last quarter. We have done close to 120 investments in the last 18 months. When everyone was saying it's a bear market, we were trying to find great founders. We've been invested in projects like Sui, Sei, Berachain, Particle Network, name the ones. Actually, last 6 or 7 projects on Binance are ours. Looking to do it. Post this one, we still are deploying the last $20 million remaining. And hopefully we'll build up the next big fund out of Dubai soon, which you will come to know. And happy to be here, happy to meet founders here. That was what I was trying to do in the whole afternoon. And thank you for inviting me.
Awesome, thank you so much, Vineet. So I want this conversation today to be interactive. Feel free to interrupt. I want to have a conversation, but more importantly, I know that there are a lot of founders and teams on the stage here. We're going to try to give you as much as alpha as possible on how to get funded, right? How to speak to these VCs. And as you might know, many of the VCs here have an algo bag, and we'll get more VCs into the Algorand ecosystem as well. Let me start up with the first question. Obviously, over the last 2 years, we've seen a big change in the landscape in crypto, right? There's been several narratives, restaking, AI, new layer 2s, a lot of new protocols. What do you guys think are the teams, what are the traits that some of the teams have at the moment that really impress you and can really make a difference in terms of being able to raise money successfully in this current landscape in 2024? You want to start, Alessia? Yeah?
Yes, I'll start talking. Yeah, so there are different traits that a founder needs to have in order to succeed. One of them, I think, would be adaptability. It's so important to position yourself in a market like crypto, so volatile, trends coming up, new technologies. So it's really important to have adaptability, in my opinion. Another point that we also look into is technical expertise, depending on the type of project you're building, especially DeFi-related protocols, real-world asset. It's really important to, have the technical skills as well. Even if you're the CEO, it is really important to you to have the technical knowledge behind it in order to guide your CTO and the rest of your team. And I think resistance. It's been tough years right now in crypto, and I know it can be really, how can I say, annoying that the market is not there yet, and you need to have a strong mindset in order to keep building, because the reward will come shortly after, hopefully.
Hopefully. I mean, no, but they should, right?
They will.
It's really important that the founder is ultimately gritty. It's hard to define, but they've got to get it done. Like, we live in a narrative-led attention economy. Prices go up, prices go down, but a clear, fundamental first principles viewpoint, that North Star of what they're doing, why does it need to exist? What are they coming to deliver? Like, that is often a little rare, if I'm honest. And finding people who have that dedication, knowing what they're going to solve. Lots of different ways to cut this, whether it's experience in the traditional world and they're bringing it into blockchain, whether it's great blockchain engineers who have met up with someone else and forging a new path for a new primitive in DeFi. There are different ways to cut it, but that first principle thinking is really important.
Yeah, I think Alessia and Richard have given some really good points, and I agree with both of them on it. Adaptability, and to your question, the market has fundamentally changed a lot in the last 12, 24 months. So for founders to be able to understand that and adapt through that and think about the product and where that sits, and so that product expertise, so being able to drill down and articulate, this is the problem we're solving, this is the solution, and understand that at a nuanced detail. So from a capital allocation point of view, we can sit there and go, okay, they're thinking about the market, they're thinking about the changes, they're thinking about how they're going to interact with their customers. Those are really key components. And then the last piece is that resilience. So you've got adaptability, but the resilience in terms of there are going to be pushbacks. It's not always up and to the right, so you've got to go through the market cycles. So how do they cope under pressure? What are they going to be like when they're in front of new investors, in front of partners, whether it's global partners, when they're in different geographical locations, whether it's in the Middle East, Australasia, here in Europe. So I think those three things, adaptability, reliability, and product expertise.
So Daniel, normally when I go to conferences, the first question is the other way around. They're like, which segments? What should we be investing in? And I've always been telling people it's not about segments, it's about founders. Today we are one of the top 5 gaming investors in one of the surveys that was done. And we didn't invest in games last month. We've been investing in the last 2 years. One of my games, known as My Pet Hooligan, we met him at GDC. I met him on the line to get my pass. I invested at $30 million. It's at $1 billion right now on Coinbase. So the point is, it's never about segments, it's about founders. Because if founders, first of all, what capabilities? Capabilities is all about the capability to do it, the capacity to do it, and the perseverance to do it. If you want to go to the moon and you haven't even driven a bike, I'm pretty sure you're not going to go nowhere. So when you look at a founder from Sui who has built the blockchain in Facebook, he has the capability and the technical expertise to do it. When you talk about capacity, has he built projects? Has he built teams? That is second thing. I definitely want to build a $1 billion company and I'm just coming out of college. Maybe, the 1% of the population becomes Zuckerberg, but 99% have to have some capacity to do it. And finally, it's about perseverance. A lot of founders, as soon as the bull market comes, suddenly rooms are full with thousands of people. But the real founders are the ones who are in the bear market. I actually was at one of the events and one founder comes to me and says, just randomly, will you invest in me? I said, I didn't see you in the last 2 years, so unfortunately, you will have to do a lot of work. So have they actually been around for the last 2 years? So these are 3 things that I look at before investing. And then there are other parameters about, what they are building, how much have they raised, what have they raised, what is their vision. But technically, founder capabilities, and definitely not a single founder. I don't want him to die on a road crash and kill my startup.
I think you're right. And look, I think during a bull market, there's a lot more noise in terms of people wanting to build, right? So it's a nice mechanism to find good teams during a bear market at lower valuation on top of that.
So I have this funny comment that whenever I enter a conference room, I can tell you the Bitcoin price.
Right. Wow. That's a talent. That's a skill. Yeah. Next question is, I also realized that there's a lot of teams and Algorand looking to build. Just very quickly, we'll do a little quick round here. I want to ask you guys to make people realize here how busy you guys are, right? How many pitch decks, how many pitches are you receiving on a weekly basis? Just give me a number. I want to just get a number. 50.
Yes,
Okay.
around 50.
I'm probably the low end. It's only 3 a day.
3 a day? Okay.
Yeah.
3 a day.
Yeah, I'm
AJ?
probably the same as Richard.
Okay.
About 3 to 5.
Vineet?
Normally at any given time, the team is having a call every half an hour.
Right.
I used to do this earlier. I'm the laziest one, so I built up a team. They do everything, and I'm always at events. But you see them evaluating over 100 plus serious investments in a month and ending up doing 5 to 8 investments a month, yes.
Right. So look, the minimum number here is like 20 decks, 20 pitches a week, right? And when you go into a VC with a better reputation, a very busy, higher AUM, everybody knows DWF Lab these days, like that's 50 a week, right? So these guys are very, very busy. How do you think a project can set first impression, right? When you speak with a team on the first call, or when you see a pitch deck, do you normally know within the first 2 minutes if you're going to throw in a check? Do you know that? Is first impression that important?
Yeah.
First impression can go wrong very quickly.
Yes.
I don't know if first impression will solve it. I mean, a plea to all of you out there. If it's a cold email to me, find someone who's 1 or 2 degrees of freedom away from us and get half an intro in. Like, it's a friendly space. No one has sharp elbows to keep people out. But I'm always wary of phishing attacks and things coming in. Like, that's the last thing I want. So, find someone to help you out. Don't just spam it in, because it might just get, unlucky people get unlucky, sadly. Just find that person. But yeah, I would say in 2 minutes, it can go wrong. Don't be overly bombastic. Like, we all know that you're here to change the world, and that's great. We support that. But let's get there together, right? Rather than putting it all up front and setting a tone that is hard to back up.
I think another point is being respectful towards the investor's time. I've had a couple calls that the founder was late, and I don't think that's a great impression, especially for the first call. So yeah, I think first impression does matter. As you were saying, right? It does not mean that just because you had a great first impression, you will receive that investment. But it's a small space. People talk. And another point is that you may not receive an investment for this specific project, but you may launch a new one or you join another project. And then if you have a good relationship with this investor, you can pitch to them again. So yes, it's really important to maintain good relationships, especially with someone that you're asking money for. So yeah, I do believe first impression does matter. Does not mean that it will persist, but yeah.
Short answer is yes. Longer answer is there's nuances through everything, as you know. I think there's a qualification process that goes on when you're seeing the deck, or a lot of it tends to be recommendations amongst other VCs. So there is a level of due diligence that's been done before that first meeting in a lot of cases. But if they know their product and they're able to articulate it, and you are going to pick that up very, very quickly, that does tend to lead the conversation further. but also it shouldn't always be a pitch. It should be a conversation and get to know each other and understand what the drivers are behind the scene. Because a lot of the time, we have product experts, or we are product experts, so we understand the problem they're trying to solve, but the ability to articulate that, but also, again, I come back to one of my earlier comments, what are they going to be like in front of partners? What are they going to be like out talking to customers? So yes, it's important, but it's not everything. It's more about, I think Alessia said it, if they're rude, obnoxious, if they don't respect time, if they don't respect other people, probably a lot of red flags.
I think first impressions are very critical, but it's the process after that's important. I remember, in fact, Christine invited me here, and I invested in a project that she used to work with before. It was Skeet protocol from Germany. I went on a call and I see this founder who was like really techie, and my team was like, sir, we don't understand what he's doing. I'm like, no, but this guy looks like really someone who is talking about stuff, and Kilt really did well in the past, and it's continuing to build. Because yes, when you see them, you get excited that they're doing good, but then those follow-ups. And what also you have to understand is that when you meet me here and you're trying to pitch me a startup in 5 minutes, please understand 30 other people have done that. It doesn't end up that way. You really need to focus on getting a follow-up meeting or a coffee chat or something, and just not talk about your project, just talk about something else, so that I remember who you are. Otherwise, it will just go off my mind and you will be just a number.
That was the point about having conversations, just being able to talk and build the connections, because that's a longer-term play. So.
This conference is a fantastic opportunity for all of you guys to connect, have a conversation, have a face-to-face with all the VCs here. So, I mean, now you know what they look like. I would strongly recommend you approach them, at least have a conversation. In my example, I was talking to a couple of VCs, Dragonfly being one of them. He was telling me, hey, look, we don't even look at decks if it's not via a warm intro. But I think what's also important is you got to think, okay, is the person that's going to introduce me like my project sufficiently? Because everyone has a finite amount of bullets for introduction as well, right? So you gotta be extra mindful when it comes to ask for these referrals, and you need to make sure that whoever sponsors you is, fully believe in your project, because they're putting their reputation on the line. So when it comes to fundraising, right? Just to help some of the teams here, what is something that you guys think is often overlooked by a team when they're fundraising? Is there something that they're neglecting that they shouldn't? Is there a common mistake? Any tip on that?
Yes, it's just a second because I have seen many. Don't put false information in the deck. For example, I have received investment from this and this firm, or I have a confirmed exchange listing. Don't put this, because VCs, whenever they're doing their due diligence, they will check. And I would ask, for example, Cypher or you guys, hey, have you guys actually invested into this project? And if they say no, I'm like, okay, red flag. So yeah, don't put false information. If something is not confirmed yet, I would also not put. So those are the like major red flag. But a good deck, or what founders should do, is explain their solution in a simple way. Of course, you can go towards technicalities afterwards whenever you're doing more due diligence and the VCs ask for more specific details. But it's important to make sure that someone understands you in like less than 30 seconds or so what you're doing and what you're building, because if not, it becomes too overcomplicated. And as Vineet was saying, we hear pitches all the time, and then you end up even forgetting the details. So just try to have a short, simple answer, and it will stick around much better.
All right, I'll quickly jump in. As you know, Daniel, I'm a pretty simple man. A working MVP, key, just a working MVP. Being able to demonstrate the product in real time is super important. And also understand the audience that they're pitching to. So you have VCs at different stages of the curve that look at the business and the risk profile through a different lens. So an earlier VC is looking for different requirements, and they will allocate capital against that, versus a later stage. And obviously, as you go through that curve, you go from a proof of concept to an MVP to a working platform. But an MVP, critical, number one. Yeah.
So think the biggest thing that founders overlook is building personal relationships and keeping people informed. You know, they just see someone pitch the fund and then vanish for years. Meet people, build up relationship, meet up at coffees, meet up at events, keep people updated. I'm pretty sure I can do a raise of hands with VCs that in Web3 you never get an update mail from your founders. In Web2, the founder sends a monthly update that this is what I did, this is what I did. In Web3, less than 5% people do that. So basically, I even don't know whether they are dead or not. So I built up a portfolio manager who regularly calls up, and sometimes those guys don't even respond. Because the problem is, if I don't know whether you're alive or not alive, you know, how can I help? And they don't even reach out for help sometimes. So build relationships, keep everyone informed. VCs informed are VCs who are going to support you till the end.
AJ, just a comment on what you said. I really like the MVP comment. Because I think even for a guy like me, if a team approaches me, not even with a deck, but with an MVP, shows me the demo, what it does, I'm a very visual person, that is actually a pretty decent way to raise money. You don't even need a deck at that point, right? So an MVP is very, very powerful. But if you have a deck, make sure that the message is clear and concise enough. That comes back to what Alessia said. And the first 2-3 minutes, I need to capture the essence of your message. What is your product? What are you trying to achieve, right? We're all VC Web3 funds here. You know, there's no need to spend 3 pages on saying why Bitcoin is the greatest thing or why crypto is the future. We all know this. We're on the space, right? So be as concise as possible and try to convey your message as simple as possible for your audience. Yeah, Richard, you were going to say something? Or?
Sure. I mean, it's a symbiosis of all these points, right? If you've written it in the deck, expect to be challenged on it. And respectful of time, like, unfortunately, it will go from 30,000 feet up to the very small detail very, very quickly. That's why MVPs matter. It's what we're all trying to sift through, drinking from a fire hose. It's tough, but be ready for that. If you've got a valuation number in mind, have a reason. The number of people who wilt entirely when you say, but why? And well, I think I heard someone raising at that. Like, it's not good enough. You got to have backup to what you put. And then the final mistake that I see a lot, personally, is where, like, build a founding team around you who can help support you. Like, if you're a real technical person, like, find someone who can help you with the marketing side of things. Like, it is an attention economy. If you've got great ideas and you're an awesome front person, but you don't have the technical know-how as well down, get a CTO on board. And, like, make sure you can cover that and talk beforehand. The number of meetings that have fallen apart because they clearly are on different pages about key aspects. That's for us, that's like a hard stop. If the team aren't together on things, there's no way they're going to get through the pain of delivering go to market.
Yeah, look, I think there's another point where we know how hard it is to come and pitch. We know how hard it is to run businesses, and a lot of VCs have done the 0 to 1. We've had our own businesses on the other side of the table, and so, you know, we understand that, you know, we're dealing with human beings and we're dealing with ideas, but we're also just equal. You know, we're human beings. We're normal people. So to have that conversation is so important. But we understand how hard it is, and to raise capital for a founder who does that, full respect. If they manage to do that and they do it on cycle, full respect, absolutely. So
yeah, everyone says it's hard to raise capital in, which is true. I was a Web2 founder for 15 years. Definitely tough to raise capital. But in Web3, it's comparatively easier. Yeah. I'm not joking. It's seriously, like, I always wonder that why the hell didn't I do a Web3 startup? For me to raise $2 million, it took 2 years. Interestingly, a few days back, founder who has done a 600 million market cap company comes and says, oh, you're not doing anything on summer holiday, I'm planning to do something on memes. Right. 2 days back, started raising, sitting at $1.5 million by today. Yesterday night, 1.5, like, that's how fast it happens. Beta Chain did the same thing, $70 million in less than 3 days. So, right?
Versus Web2. Yeah. Yeah.
like, it's not easy, and it shouldn't be easy because we're dealing with real businesses. So those comments, I sit there and go, well, that's not good for the entrepreneurs because they're getting a sense that, we can go raise money using it's just an idea rather than having a proper business that solves real-world use cases that actually have revenue lines and can interact with the traditional markets, which is super important. Yeah.
But in this specific case, it was a founder who has already done a project worth $600 million and launched through a product, Singularity ecosystem, for example. So it's easier because they have the capability and capacity.
I want to try to showcase some of the personality of each VCs, right? We all have our little quirks, what is something, maybe like a red flag or a pet peeve? One factor thing that you meet with a team and suddenly you say, look, they did this, I'm not investing in them, it's game over. Like, do you have a particular pet peeve when it comes to speaking with a team? Or maybe you don't, right? But do you have one when it comes to interacting with team and investing in them?
I think I've mentioned a couple of them prior. Of course, being respectful. Not being late on a meeting is for sure one of my pet peeves. I don't know, maybe it's because I'm Swiss, but respect of time is really important for me. Another point is the founder not knowing how to reply to basic questions. For example, what's your competitive edge? You need to have those things in your mind already, like this is my product. So I think those are kind of the pet peeves I see. And again, not having correct information in the deck, putting out just shilling names, no, it does not help. It does not help at all. Actually, it's a red flag for many VCs.
I mean, it's as simple as you only get to sell your integrity once. As soon as you've broken that, whether it's weird information or something gone wrong, or the peer group, like we all share deal flow because we all want to help people. If we see a deal and we really like it, but it doesn't really suit where our capital is being allocated right now, we know others, right? We can pass it over. Like, no, this fits over here. Make a call, get you a really good intro. So, even if it feels like maybe this isn't a fit, do your best because you never know where it leads.
100%. Not knowing your market, not knowing your product, not knowing your market, not knowing your customers. And those are really simple and fundamental requirements for any business, whether it's a startup, whether it's a large institution. And the inability to articulate on each of those key points is a red flag, absolute red flag. So, yeah.
I think what Alessia mentioned is, that's giving wrong information is completely off. Some of these founders say, fake it till you make it. No. Don't do that. It doesn't, last cycle, there was this time when Gamify was really big. And suddenly I would get these founders sending me videos of their games. And my first question was, can I see the login? Oh, the login is on that. I'm ready to wait. Show it to me. Basically, they were just making those demo videos in Gurgaon. So this was all about faking it up. Then sending this news that this guy has invested. If you know this guy, definitely I also know this guy. Yeah. And I will check with him. And the most funniest one I have ever heard is, I have the perfect coin to make you a millionaire. You make yourself a millionaire first and then make me a millionaire, bro. So don't do stuff like that. Don't pull stunts like that. Talk about your product, talk about your experience, and be nice. People will invest.
I'll give you mine. Mine is when I'm giving feedback. And as you guys know, to even reply to a VC, it's 100% negative, to reply to a project, I'm sorry, it's 100% negative EV, right? You're getting nothing back on this, right? So for me to formally reply, some feedback, and sometimes just the reply is very poisonous, like, oh yeah, we wasted your time with you, or they don't like to listen to the feedback. So you need to appreciate that everybody's time is very precious. And when I'm giving my feedback, I'm actually spending some of my time, my resource, opportunity costs, and there's usually nothing good that's coming out of this, right? And the second thing I would say is, as a tip, if a VC says no to you, I think a good way to keep in touch with these guys is keep them updated. Ask them to be on your distribution list on your product development, right? A first no doesn't mean that it's going to be a second no in 3 months when you'll have a better product, more user revenues, right? So a really good trick of some of the teams that I've spoken to is the VC said no, they updated them on a regular basis. After 2-3 months, they saw the update, the VC reached out directly, and they were able to get funding. So keep in touch with these guys. The industry is very small. And I think that's a really good way to get goodwill and traction. And you have to have tough skin and thin skin.
That's a great point, Vineet. You make it too. Like, it doesn't. Like, always remember the person on the other side of the email is doing so many other things. It doesn't take a lot to reach back out and keep people updated. And we're currently diligencing a deal that's entirely changed over the last 6 months. This space moves so quick. Like, one no doesn't mean permanent no, as long as you treat people like decent human beings.
Yeah, exactly. Sometimes the VC could have just, passed on this opportunity just because of low traction. So keep in touch. There's no problem with it. The VC will not be like, oh my God, this guy's messed. No, just keep in touch. And then also, maybe you guys have been, maybe your product does not make sense now, but as we all know, crypto is constantly changing, trends are changing. It might be that your product is a fit in the future, or maybe the VC's fund strategy has changed as well, and then you could be a fit. So yeah, I always keep in touch.
I'm going to ask you guys the last question. We have another 10 minutes. I want to talk about the subject of moonlighting, right? I'm sure there's a lot of projects, a lot of teams, a lot of founders having a full-time job. They try to make it. They try to build a project on the side. How do you guys feel about that? Are you okay with a small indie developers moonlighting at first? What is your approach on that? And yeah, what is your take on someone who's kind of doing that on the side?
Look, we do ask sometimes, like, are you full-time in this project or you're part-time? But in my opinion, if you're a hard worker, it doesn't matter, because I know many people that only have one job and they don't do their job properly anyway. I think at the end of the day, we understand as VCs that you need to fundraise, you're bootstrapping, and it's okay to have your normal job on the side. That it's not a red flag. It's not something that you will ditch the product just because of that. For me, it's just showing that you're hardworking is enough. But yeah, it does not mean that just because someone has 2 jobs at the same time that he will not receive an investment, because it doesn't matter. It's about the personality of the founder, how hardworking he is or she, and yeah, the other traits that we talked before, adaptability, etc. So yeah.
So I've been a founder for 15 years. I'm probably the super extreme of it. I believe a founder should focus on his startup, then only a miracle can only happen that. I got my parents to sell 2 of their houses to fund my startups. I said I'm very extreme. And I would focus on it because, to build a team, first of all, takes a lot of energy. To build a business model, to build a company, to be at different places, takes a lot of energy. If you're going to do something else and have the safety net of having a salary coming every month, I don't think you can do a miracle. They always say miracles happen outside your comfort zone. So personally for me, I am of the opinion that you should have a team that is working full-time on the project. Maybe some developer who is doing 2 times because your saving cost is okay. But the core team should focus on it. And if you're here part-time only after you fundraise, that means you're not convinced that the idea can raise money.
But I mean, it's just for the bootstrapping part that he means. Of course, the founder and the core team afterwards, when the project starts growing, etc., has fundraised, they will need to focus more on that. But
for me, whenever I tell founders how to raise capital, I say that first, if you have to really raise your capital, go and scam your mom and dad. Then scam your family. At least then you have $200,000 right there, because if you cannot convince your mom and dad, your wife, your brother, your someone to give you money, how will you convince a VC? And that money should see to it that you, do a full-time job over there. My thought. I'm completely extreme. I understand your point as well.
No, it's fine. It's fine. I mean, different visions.
It's probably plausible. Just depends on where you're going to take it. Like if you're doing it part-time and then you get a real MVP so that you find there's real traction and go to market, then you quit and ask for the money, totally. Or you're raising at a de minimis valuation because really what you need is a stipend, a grant to get going. But that's why the foundations exist and things like that to fill that hole. But yeah, if you don't believe in the core dream enough you've got to have some skin in the game. Like if you want someone to fund your vision, but you're not willing to put at least pain equity down, then it's harder to believe in it, I think.
Yeah, I think I'd be pushing founders who want to maybe do a side hustle as well towards the accelerators. Go test your product, and within Algorand, there's a couple of great accelerators. Go talk to the accelerators, go through the 12-week program, understand your product. Are you going to commit to it? And the accelerators are fantastic at weeding out what is a good project, what isn't, and then they can come through to the capital allocators, and at that point, you're committing 100%. Otherwise, there's no deal. Absolutely.
Look, we have a couple minutes left. No more questions from my side, but I want to give the stage back to some of our teams here and VCs just to shield their own fund. So what is the best way to reach out to you? Are you raising? Are you deploying? Please, a couple minutes for each of you guys.
Okay, so if you want to reach out to DWF Labs, we're really open. Our social media is, quite easy to message us. We also have a forms on our website in case you want to submit your project. Our BD and ventures team are constantly looking at those projects, but feel free to just reach out to me as well. I'm here, and that's my main goal for this event, is to meet as many founders as I can. So please, if you see me with the DWF shirt, just reach out. We exchange numbers, and then you just send to me everything later, and then we can have a chat. In terms of fundraising, no, we've never fundraised before, and we don't have plans as for now. And yes, we've been actively deploying for the last years. So yeah, feel free to reach out. As mentioned before, we invest in different stages. So it could be pre-seed, it could be seed round, pre-TG, or if you're already listed and you guys are looking for an investor that also does later stage, feel free to reach out. We are chain agnostic, but if you're on Algorand, even better. But we're also vertical agnostic. So if you're building a game or something related to infrastructure, feel free to reach out. We are, as Vineet said, investing into all spaces. We don't discriminate type of projects. So yeah, feel free to reach out.
I just want to highlight that Wallet, our own Wallet, is a portfolio company of DWF, so we're very proud of that.
Yes.
Thank you. Richard.
Short version, feel free, grab me, reach me, LinkedIn, whatever, have a shot, but ideally find someone who's 1 degree of freedom. I see one over here. So, use those skills, move through that channel and that funnel, and we'll make sure you get to see the right people where it makes sense. And yes, we're actively deploying. We're pretty busy in all shapes and sizes, and we have capital to suit at the different stages to help projects out, and we have a number of projects on Algorand we've been involved in, and friends and family of the network. So keep it coming.
I've been told that you're going to be a little bit more active moving forward on the VC side, and also interestingly, you guys launched a NFT fund, which I think is super, super cool.
Yeah, that's a lot of fun. That's a personal favorite of mine. I'll bore anyone about digital art if they're interested, so come grab me.
Thank you, Richard. AJ?
Just the usual channels. So social media, come grab me, happy to talk. Tell me a story about yourself. I always find that more interesting. Let's start the conversation that way rather than straight into a pitch. We are raising capital on a new fund, which is pretty exciting for us. And part of the trip up to Europe is to talk to investors about that, which has been great. Do we deploy capital? Yes, we do. But we're waiting till the next fund is complete, but always interested to build a relationship with the teams. We'd like to go through rounds, so we'll do secondary rounds with founders. So it's a long-term relationship.
If you're not doing well, reach out to AJ. He's going to take care of you on your fund. There you go. You need.
I've been deploying for the last 2 years. That's where the 120 startups were invested in. Have 20 million remaining. That should cover this cycle for sure, because there's a lot of rollback capital that will come as well. Are we doing a fund after this? I've been told that we are doing a new $250 to $500 million fund, and there's 180 million or so of commitments in there already. But that's next cycle. That's nothing to do with this cycle. Happy to meet anyone. As soon as I get down, I'm available. Meet me, get my Telegram. I never reply on Telegram, so the objective is to get the group made with the team. Once my team comes in 2 weeks, you have an investment or you don't have an investment. because that's the back-end team has to do something. But getting our connects and meeting us, I'm at most of the events around as well. Happy to meet up, but once a personal connect is made, maybe there's a faster way to turn around, but getting a connect and getting a group made with us is the best way to get a deal.
Thank you, Vineet. Last thing I want to say is we purposely made this conference a lot more communal. We've got some good feedback from VCs, so please reach out to us or any of these guys. It's not a 20,000 people conference, right? We're happy to speak with everyone. Probably no queue as well, which is a big plus. But look, thank you very much for everyone to attending this panel with me, and hopefully it was useful for you as a founder or as a team building on Algorand. Thank you so much.